Hi guys, welcome. So in today's video, we'll be starting with basics of accounting. What I believe, like we should know the basics of accounting before directly jumping on the Odoo database within accounting. Okay. So like I'll try to complete the session in 15-20 minutes, and it is like basics of accounting, and I'll be trying to explain the things with an example later on. Then after understanding the concepts, we'll directly jump to the Odoo and try to understand the Odoo accounting. Okay. So what I believe, like there are so many concepts are there, but like how we can start, we should start with the like elements of the accounting. So as we understand, like there are only 5 types of element. Like no matter what is your account name or account number or whatever it is, it must any account in defined in the Odoo or any other software. Okay. If or any accounting, okay, or any other software where accounting is in use. So accounts are categorized in 5 categories only. Okay. What are those? Assets, liability, equity, revenue, and expense. Okay. So what is basically these categories are? So, so basically the first category is called like asset. So assets are what I can say, like we can understand, like assets are the company's property. Okay, whatever companies owns, those are considered as an assets. An asset can be a current asset or non-current asset. Let me just give the example, then you can understand like what is an asset. Okay, like your company's building, your company car, your company's furniture, infrastructure. Okay, which is your company's property. Okay, it is considered as an non-current asset. It is considered as a non-current asset. And if we talk about the current assets, so current asset can be a company's bank account or a company's cash account. Okay, so cash account, bank account are those type of things are considered as in current assets. Okay, the second thing is like liability. Liability is something like which is your company is liable to pay. Liable to pay means it may be a loan account or it may be a vendor pending bills. Like vendor gives us the bill, but we did not pay, so that is our liability that we have to pay in near future. Okay, or tax for the government. Sometimes we receive the tax from the customer and that we have to pay to the government. Okay, so those things are considered as a liability. Then equity. So equity basically consists, the first thing it is like your capital investment, the capital which is you invested at the first time for before when you start your business, that is a capital amount, and that comes under the equity. Then the equity can be your retained earnings. Okay, like after completing a accounting cycle, whatever is your retained earnings, whatever was your net profit, okay, that has to be enlisted at the equity side before starting a fresh accounting for the next accounting cycle. Okay, so that like your whatever is a net income will convert into a retained earning. Okay, and that will keep in the equity side. Okay, the equity can also be understand like if like if we check all the assets. Okay, like if we get the cost of all the assets, current and non-current asset, every kind of assets of your company. Okay, if we get an estimated worth of that things. Okay, all current and non-current asset estimated worth of that things, and then we subtract all our liabilities of company, like all our loan, whatever pending loan, whatever pending bill, tax and pending tax, and pending bills and everything. If we subtract all these things, all liabilities from all asset, then whatever left with is also considered as an equity. Okay, so equity is nothing but the assets minus liability. Then we have the revenue. Revenue is something like whatever you are selling. Okay, whenever you are selling, so whatever you earns, okay, yeah, whatever you get out of your selling, okay, that consider as an revenue. Okay, so your sales amount is considered as a revenue. Then expense is like, then there may be a lot of expenses in your company, like whenever you go out and purchase something, maybe for business or maybe for like maintaining your business, or like it may be a, you go out and you pay your electricity bill and paying your employee salary, everything are considered as an expense. Okay, you may go out and purchase something for reselling, so that is also an expense. Okay, so that is an expense. Here I'm what is income? So income is nothing but the revenue minus expense. Okay, revenue minus expense. Let's say like you buy something at 500 rupees and you sell it on 2000 rupees. Okay, so 2000 rupees is your revenue and 500 is your expense. Okay, and 2000 minus 500 is equals to 1500 will be your income. Okay, so this is how we do consider the income. Sometimes people may get confused, like revenue, they think like revenue is the income. Revenue is not the income. Okay, revenue is money that you get out of your sales. Whenever you sell something, whatever you take as in money, okay, whatever money you take, that is considered as in revenue. Okay, so that's all. Then okay, this is from Odoo. So in Odoo, all the accounts will be categorized in these particular categories only. And as you can see, in Odoo, we are having only assets, liability, equity, income, and expense. Only 5 categories are there. Okay, so whenever you create an account, or whenever it is like built-in account, or you are creating some account, or you are importing the chart of account, okay, all accounts which is defined inside the Odoo will either will have a account type. That account type has to be defined. It is a mandatory field. Account type has to be defined. And once you define the account type, you can see the category. So all receivable, bank and cash, current asset, non-current asset, prepayment, and fixed assets, all considered as an assets. Okay. So based on asset, liability, equity, income, and expense, you can consider, like, you can get the category of any account enlisted in the chart of account of Odoo. Okay, so why I'm like giving so much emphasis on this? Because of this, you can understand a concept of debit and credit clearly. Okay, so now what I am saying, like, assets and expense. If any account which is having the category of asset or expense will be considered as a debit account. And what is debit account? Debit account is the account where your balance will increase when you are doing a debit. Okay, so your balance will increase with a debit if your account is category is asset or expense. But if your account category is liability, equity, or income, if your account category is liability, equity, or income, in that particular case, these are the credit type of accounts. Okay, in that particular case, what will happen? Your account balance will increase with a credit. Okay, so if your account is a credit type account and you are doing a debit, so your account balance will reduce. If your account is a credit type account or you are doing credit, your account balance will increase. Okay, if your account category is like asset and you are doing a debit, your balance will increase. If your account category is like debit and you are doing a credit, so your balance will reduce. Okay, so this is important. Okay, now rest of the things we'll be understanding with an example. Like, there are so many things which I am just showing here. You can pause the video and you can read the definitions are defined here. What is accounting, what is transaction account, and what is why accounting, what is general entry, ledger, account. Okay, definitions are there. You can pause the video and you can read this. It is also important, but I'll try to explain the things with an example. Okay, so let me go to the example. Okay, so this is my example. What is here happening? Let's say we have someone called Mr. X. Okay, and Mr. X is our businessman, and Mr. X is the person for whom we are maintaining the accounting. Okay, so we are doing the accounting for the Mr. X because the Mr. X is our businessman here. Okay, so and one day what happened that Mr. X thought to start a business, and for his business, what he planned to buy some cups, and then after buying the cups from vendor, and then he go to the beach and sell all the cups. Okay, and this is how he planned. Okay. So what happened, um, what is the initial thing, like Mr. X is having uh, let's say 400 rupees in his pocket. How much he is having? 400 rupees in his pocket, and with those 400 rupees he want to start a business. Okay, so once he think like he will invest, he will invest his 400 rupees for his business. Okay, at that particular time, that 400 rupees become a capital. That 400 rupees become a capital investment of his business. Okay, so what will happen? This is a transition because he he started business with a 400 rupees. That is a transaction happened. Okay, what is a transaction? Transaction is something like whenever some money related things, or whenever there is some give and take happens, where money, like physical or non-physical money thing involved. Okay, monetary things involved. Okay, why I am saying non-physical? Non-physical means if you are buying cups or you are buying furniture, with whatever you are buying which is having a cost is like money related things. Okay, so monetary things. So whenever some monetary related things happen where we give or take something, that is called a transaction for a business. Okay, the first transaction happen here, like the 400 rupees he has to be in kept in as his capital amount. Okay, so now I am explaining, whenever a transaction happen in a business, the first thing happen is called a journal entry. The first thing happen is called a journal entry. So after journal entry, we do the ledger posting. Okay, we do the ledger posting, and based on the ledger posting, okay, we get the reports called profit and loss report, balance sheet, and trial balance. Okay, so I'll explain everything. You simply understand from here. This is my journals. Okay, there I'll make the journal entries, and these are my accounts. Okay, I am having Mr. X cash account, I am having Mr. X expense account, Mr. X sale account, and Mr. X capital account. Then this is my balance sheet, then this is my profit and loss report, and this is my trial balance. Okay, now we'll understand things one by one. When Mr. X is try to start a business with his 400 rupees, so the 400 rupees he will input as in capital for his business. At that particular time, a journal entry has to be done because it is a transition. And what is a rule for the journal entry? uh, there is only one rule. Whenever there is a journal entry, at least two account has to be affected with equal credit and debit. Okay, with equal credit and debit. So if one account is getting debited with, let's say, X amount, so why, like, other account has to be credited with an X account. The one is debited with same account amount, and another has to be credited with the same amount. So amount has to be same. This is one rule. Okay, and minimum two account has to be affected. Okay, so what happened in this particular case? His capital, and as I say earlier, capital is a equity, and equity is a credit, and credit balance increase with a credit. Okay, so credit equity is a credit type of account. So credit type of account balance will increase with a credit. So I'll simply make a credit of 400 rupees in the capital. Now, once you make a credit of 400 rupees in the capital, so as per the general entry rule, there is some there should be one more account, or one or more account may be there, but that has to be debited with the 400 rupees. That has to be debited. So what account is the cash account? Because now we are considering all business happening here in a cash. Okay, so we'll debit cash account with 400 rupees. Why I am debiting cash account? Because whatever you invested as a capital will should also be reflected in your case, because once you invested, like I am saying, I invested 400 rupees in my bank, in my business. I invested 400 rupees in my business. So what does it mean? In my business, my case account, okay, I do not have a bank account, let's say. So my case account has to be increased balance with 400 rupees. Understood? My case account balance has to be increased with the 400 rupees because I invested 400 rupees now. Okay. So this is what is happen at the first. Okay. So now this is a general entry. You can see we have two account here, and both the account, one is like capital account, another is like cash account. Cash is debited with the 400, capital is credited with the 400. And now what should happen? Like once you invested 400 rupees, okay, so you should be knowing, like after a year, after 2 months, if you want to know like what was the your initial investment, so you should know like 400 was the investment. In this particular situation, okay, let me show a balance sheet. So in balance sheet, you can see what is balance sheet. As I say, equity is equals to asset minus liability. It means asset equals to liability plus equity. Okay, so asset in balance sheet, what we do, we keep all the asset at one side and we keep all the liability and equity account at the one side. Okay, and the sum of total all liability accounts plus all equity accounts sum should be equals to sum of all asset accounts, and this is what we call a balance. This is what we call a balance. Now you can see we both the side we are having zero. There is nothing in the capital, but the Mr. X invested 400 rupees for his business, so this capital has to be 400 now. Okay, this his capital investment has to be 400 now, and because he invested 400 rupees, his cash account should be 400 rupees now. Okay, because earlier there was nothing in the cash account, so this is my cash account. There is old balance. Okay, this is my old balance. Old balance is zero. In all account you can see the old balance is like zero. Okay, now what I did, I debited 400 rupees in my cash account. So what I am doing, I am debiting 400 rupees. Now you can see once I debit 400, my balance increased to 400. Okay, so what is this? I am debiting, but my balance is increasing because cash is a current asset and asset is a debit type of account. I am doing the debit, balance is increasing. At the same time, I am crediting 400 rupees in my capital account. Let me do the credit here, and I just did the credit. With credit 400 rupees, my balance is again 400 rupees. What is this? Because capital is a credit type of account. With a credit 400, my balance increased 400. Now you can see my case is 400, my capital is 400, my balance sheet is balance. I invest, Mr. X invested 400 rupees in the business, and he has the 400 rupees in his case account. And his capital investment was 400 rupees. Okay, his capital investment was 400 rupees. Okay, then okay, then let me show what is this. And let me just cut this, keep it here. Let me just 1 second. Okay, let me cut this, keep it here. This is my trial balance. I am just cutting this, keeping here. And what is this account? My case account, expense account. Then I need a sales account, and I also need a capital account. Okay, and what I am doing, what is this case, this what is this value? It is the final debit, total debit in my case account. So what you can see in my case account, this is my total. Here I am getting the total. Okay, so this is my total. Total means sum of all the debits, and this is what, sum of all the credit. Okay, so I have sum of all the debits. Here what I'll keep, total of capital debit, and here I'll keep total of capital credit. Okay. So what is a trial balance? Trial balance is like in my accounting, all the accounts, I do not worry like whether the account is a asset, expense, income, revenue, or like equity, liability. I don't care. I just keep all the accounts and all the accounts total debit. This is like total debit of this account, total credit of this account. Okay. So all the account total debit and total credit. And if it is equal, it means my general ledger or trial balance is correct. Okay. So this is also called a general ledger, and this is also called a trial balance. Okay. So here you can see it is equal 400, 400. My balance sheet, as I say, balance sheet has to be balanced. And this is a profit and loss. Profit and loss is like revenue minus expense. Revenue is like when I sell something, whatever I am getting is my sales money, and expense is like my expenditure. But as of now, there is nothing I did the expense. Okay. Mr. X just invested 400 rupees in his business. That's why his capital is like 400 rupees and his cash account is also like 400 rupees. Okay. Now let us start the business. Okay. So what happened? Mr. X goes to the Mr. Y. Here is my Mr. Y. And Mr. X goes to the Mr. Y. Let me, okay. Then he say, I need 100 cups because Mr. X want to start a business. I need 100 cups. He's saying to Mr. Y. Mr. Y is a vendor. Okay, so what he'll do? He will say like one cup is like 300 rupees. One cup cost is like 3 rupees. Sorry, three, not 300. One cup cost is like 3 rupees. And total, if you are buying 100 cups, the total cost will be your 300 rupees. There is no tax. So here is your bill of 300 rupees. So Mr. Y will gives a bill to Mr. X. Okay. Mr. X just receive a bill. Once he receive a bill, it is a and it is a transition. Okay, and this is a bill he received. Then what he will do? He'll simply give him the money. Here is your 300 rupees, and he is just giving the money to the Mr. Y. Transition done. Why? Because Mr. Y gives a bill of 300 rupees to Mr. X, and Mr. X simply gives 300 rupees to the Mr. Y, and this is a transaction happen. Now transition happen. So as I say, whenever there is a transition happen, what should be done first? A journal entry. Now in accounting, which journal entry? So which journal entry? Answer is basically depends on the source document. And what is the source document here? Is like bill. Because bill is the reference. Because of that, Mr. X paid 300 rupees to Mr. Y. So bill is the reference. Okay, and it is our source document. And because of that, we'll make an entry in bill journal. Okay, this is clear. Now, imagine if Mr. X paid 300 rupees to Mr. Y and Mr. X was having 400 rupees in his bank account. You can see in cash account, sorry, cash account, he was having 400 rupees in cash. Okay, out of 400, he gives 300 rupees. So how much has to be left with him? 100 rupees only. So he gives 300 rupees to someone. Okay, and he should be left with only 100 rupees. Now, you know, like cash is a debit type of account, and your balance will decrease because of credit. So once you credit 300 rupees, your balance will reduce. So what will be happening? A case will get credited with 300 rupees, and because of credit, your balance will going to get reduced. And if you are doing a credit, you have to do a debit in another account. And which another account? So what is happen here? Mr. X did a expense. Why? Because he expensed 300 rupees in order to purchase the cups. So this is an expense. And now his total expense. Till now he did not do any expense, but after, just after purchasing the cups, he expensed 300 rupees. Okay. So he should have a 300 rupees expense account. So his expense account should increase to 300 rupees. Till now, you can see in general expense, he has zero. He did not have any expense. But now he purchased the cups. Because of that, his expense should be 300 rupees. So what we'll do here? 300 a debit here. Expense is a debit type account. With a debit, expense will increase. This is what we want now. Okay. So this is a bill general entry done. Now we'll do the ledger posting. So we'll do a debit of 300 in the expense. So you can see I am doing a debit. Just I did a debit, your expense increased to 300 rupees. This is what we want because we did a expense. After a month, if I want to know how much I did expense on purchasing a cup, that you can know with the balance, with the entries. Okay. So here you can write like cup purchase. Okay. And with debit, we have to do a credit in the case, like 300 rupees here. This is what? Cup purchase. Okay. This is what? Initial case. This was what? Initial case. And this is a initial case. Okay. So you did a cups purchase, sorry. Okay. And now you can see we did a credit. Your balance is like 100 rupees. This is what should be what should happen. Na? With a debit, your balance should get reduced to 100 rupees. And now you are having only 100 rupees in cash. Okay. And now you can see your trial balance is balanced. Your balance sheet is balanced. But how it is balancing? What I am doing, I am keeping all the cash, the final cash value here. Okay. What I am getting, I am getting a final cash value here, a final capital value here, and final retained earning. What is retained earning? Retained earning is the net income. Okay. Retained earning is the net income. Okay. But what is net income now? Minus 300. Why minus 300? Because I just purchased a cup. I did not sell it. So I already did an expense of 300 rupees, but I did not have any revenue now. So it is a loss. It is just the expense. Okay. So my net income is like minus 300. And because of that, I am getting a balance sheet balance. Okay. This is done. Okay. If this is done, so let me close these things. Now, let's say Mr. Z. Mr. Z is the client of Mr. X. Mr. Z is the client of Mr. X. And now Mr. Z comes to the Mr. X and now he is saying, I need 100 cups. Mr. X is our businessman. He just came and say, I need 100 cups. Then Mr. X did what? Mr. X gives 100 cups to Mr. Z and also gives an invoice of 100 cups, which is like 1000 rupees. It means Mr. X selling all cup, one cup at 10 rupees. So 100 cups is like and 1000 rupees. He is not charging any tax or anything, but Mr. X just give him an invoice to the Mr. Z. Okay, because Mr. Z is a client. Now what? He just give these things to Mr. Z. Now Mr. Z is just giving him the money, 1000 rupees. So Mr. Z gives him a 1000 rupees. So this is again one transaction happen. What is the reference document here? Source document is like invoice to the Mr. Z from Mr. X. This is a source document here. And Mr. Z just gave him the money. Okay. 1000 rupees. It means transaction is also done. Okay. So this is a transaction. Whenever I say monetary related thing happens, okay, monetary, whenever something give and take happen where monetary things involved, okay, either direct or indirect money involved. So it is done. So what happened with 1000? What is this invoice? Now you see, Mr. X was already having 100 rupees in bail in his bank as in his cash. Okay. Now he also received 1000 rupees from Mr. Z. So his balance should be 1100 now. Okay. Because he again received 1000 rupees. and he was already having 100 rupees. So now it should be 1100. Okay. And as I say, case is a debit account. Your balance will increase with a debit. So what we have to do? We have to do a debit of 1000 rupees in cash. Now, if we are doing a debit, we have to do a credit in another account. But which another account? So, as we know, like sales and revenue are something which we get out of our sales. Okay, so we sell 1000 cups of 1000 rupees. Okay, so that 1000 rupees entry should be coming into revenue account. It is our revenue. Okay, how much money we are getting. We don't worry about the expense and everything. Sales is something like we receive out of our sales. Okay, so we'll do a credit here. Okay, a general entry is balanced, equal debit, equal credit, two account are affected, and case credit, and case is a revenue, and revenue is a credit type account. If we are doing a credit, balance will increase. That is what we want, because if after 1 month, if we want to know how much how much was the sales amount, 400 cups, that we can know. Like we earn 1000 rupees. Yeah, oh, sorry, we have a sales of 1000 rupees. Okay, for the 100 cup sales. Okay, so this is just the entry. Okay, general entry. After general entry, what we'll do? We'll do a ledger posting. So cups sales. Okay, and what we'll do? 1000 here. Now you can see I am getting 1100. Yes, my balance should increase to 1100. And other thing is sales. So where is my sales? This is expense. This is my revenue. Sales is a credit type account. I am doing a credit of 1000. Okay, I did the credit of 1000. Because of credit, my balance increased 1000. It should be, because sales revenue is a credit type account with a credit, balance should increase. It is increased to 1000. So this is also done. Now you can see my balance sheet is balanced. Yes, my balance sheet is 1100. Capital investment is this, case account is this, return earning. What is return earning? Return earning, as I say, it is a net income. And what is this net income? Net income is like sales minus revenue, total sales minus total revenue. How much is my sales? 1000. How much my expense? 300. So what is the difference? 700. Okay, sales minus expense is 700, and it is my income. So what is the income of Mr. X? 700 rupees. What is the revenue? 1000. What is the expense? 300. Now here in my accounts, you can get the final balance here. After all this happening, all business happen, we have finally 1100 in my cash account, 300 in my expense account, 1000 in my sales account. Okay, and 400 in my capital account. If somebody want to see the status of business, let's say this thing happened at 5th of August, at the December or January, any next month, next year, after 2 months, if somebody want to see what happened at the 5th of August, so they can see. They can simply see this. Okay, with this remarks and debit and credit, they can simply see what happens, how much they earn, and they can see the profit and loss, trial balance, everything. So he can see a trial balance is balanced, we are having a correct net income and everything correctly. Okay, so this is the basic concept of accounting, where we simply learn what is debit, what is credit, which particular account has to be debit, which has to be credit. Okay, and what is balance sheet, what is trial balance, what is profit and loss report, what is account, and what is ledger posting. Ledger posting, like after making a general entry, we simply make the entry in the respective accounts. That is called a ledger posting. Okay, so everything I try to explain here. In the next video, I'll be trying to explain everything with Odoo. Okay, so we'll open the Odoo database and we'll try to explain. I'll try to explain debit, credit, entry concept. There are a lot of concepts that I'll try to explain with the Odoo. Thank you, everyone. Good day.